Johny, big positive momentum on the local market, up almost 2% on the JSE all share. And as we were chatting a moment ago, it's all about higher commodity prices, a weaker rand and positive news flow out of the US. The question to you, sir, is whether this is sustainable.
Well, I think as we've said in the last 4 or 5 months that I've been on the show, we generally think the market is expensive. So generally we think the market is overvalued, and at some point we shall see either a correction or the market trending sideways for an extended period of time. The rand obviously has been quite strong, and the weakness today obviously helped the resource counters. I think out of the top 10 stock today, 9 of them were resources. I think the other one was Old Mutual, probably being priced in pounds and then translated back at a weaker exchange rate, led to those higher gains.
Is it difficult to maintain your stance? You point out that on the show for the last couple of months you have been saying that the market has potentially run ahead of itself, and yet the momentum continues to be to the upside. Coming back to the fact that, is it difficult to maintain your stance when the market keeps saying you're wrong?
It really just, I guess, depends on sort of valuations. So I guess, if the market goes higher and sort of valuations, price to book or earnings tends to go higher as well, then we have the conviction to stay with our call. So generally, yes, I think we're probably now in the minority, but generally our view is that the market is expensive at these levels.
Well, let's look at a stock that has run particularly hard and that came back today. That's Naspers, closing at the bottom of the top 40 at 306 Rand. This was certainly one to bet on in 2009. It had a big rally. And again, the momentum here seems to be on an upward trajectory. Do you concur with the view that there's still upside on a stock like Naspers?
We sold out of Naspers last year during the rally at some point. I think the decline we've seen in the last 2 days largely driven by Tencent doing an acquisition in Russia, which maybe the market didn't like as much. But generally, yeah, we felt that Naspers had run too hard, and we started to look for value elsewhere in the JSE.
Yesterday we had news flow out around Investec. It may actually have been the day before, and that was that Kensington in the UK was going to be fined £1.2 million for overcharging customers in that space. Is that significant in the life of Investec? I mean, I look at Investec PLC closing up over 1% today, so certainly not any movement in the share price.
Yeah, the news flow was carried on some of the wires. It's probably not going to affect Investec sort of at a group level, but obviously a bit concerning that obviously Kensington got themselves into a bit of trouble, really just overcharging clients for late penalty fees, etc. And the FSA, they're fining them. The FSA is effectively our equivalent to sort of the FSB, which regulates a number of the financial institutions. But they seem to have it under control and will be going back to clients and reimbursing them for whatever they overcharged them. So it looks like Investec's doing the right thing there, and obviously going back to clients and reimbursing any fees they shouldn't have charged.
Let's pause for a moment on the banks and how you feel about this sector in particular.
We've got some minimal exposure to the banks, but it's not a sector that we like at the moment, or that we've been heavily invested in for the last number of years actually. We still think there's quite a lot of headwinds to asset growth at this point in the cycle, and generally we think there's probably better value elsewhere in some of the defensives as opposed to the cyclicals.
Coming to Sasol and a complete change of sector. Sasol is one of those stocks that a number of managers keep saying has lagged the market, and that there is potentially value in the stock, given the fact that they have had those operational issues, and we've seen the rand strength giving Sasol a real beating. At 308 Rand, what would you be doing with Sasol?
We'd probably be buying Sasol at these levels. Sasol obviously had a massive run up to the July 08 peak where oil nearly got to $150 US. We sold at some point in that run up to the peak, probably missed the last blow off of that bubble. What you've seen from July 08 till probably March of this year is an underperformance of Sasol relative to the broader market. So even though oil's probably doubled off its low base, Sasol has continued to underperform. Largely because it's still more geared to a depreciating rand than an increasing oil price, and the rand obviously, as you say, has been quite strong, and they've had the fines with the Competition Commission, etc., and production problems as well at their Synfuel. So there's been quite a lot of negative news flow, but at 300 rand, we think it's beginning to look attractive again.
Let's come to the US and the influence that has on the local market. Obviously, we do take our cue from what is happening in that territory. Intel came out with very positive results after the bell last night. They were surprised on the revenue line, coming in at $10.3 billion. Market was expecting $9.85 billion, and also headline earnings per share at 43 US cents, as opposed to the consensus number of 38 US cents. So certainly much momentum, positive momentum from that earnings number. JP Morgan also coming out positively. Alcoa the day before did, however, disappoint again on the revenue line.
Yeah, those numbers are obviously quite volatile. So as you say, Alcoa came out yesterday morning US time and disappointed, and that originally dragged the market down. But by the end of the day, you had very sort of positive Intel numbers, and you've got JP Morgan this today on higher sort of fixed income trading, shooting the lights out. So that's giving quite a lot of momentum to the market, and that will continue to be the case. I mean, earnings season is upon us, and the market will try to gauge how the US is recovering. I saw some comments from Bernanke today talking about the moderate recovery. So he seems to be slightly more pessimistic, or guarded at least, than the equity market seems to be pricing in at this point.
And from Ben Bernanke, the Fed chairman, also the indication that they're going to continue with their dovish stance on US interest rates. So interest rates lower for longer. Market loves that.
Yeah, I didn't actually see that on the news article that I read. Maybe mine was just a bit delayed, but the article I read said that they hadn't given any specific guidance on where interest rates would go. So the extended period of interest rates for longer wasn't necessarily mentioned, but if it was, obviously that is good for effectively the carry trade that we've seen, and I think some of your previous speakers spoke to that about the hunt for yield. But that in itself is a danger for emerging markets, because if all the developed asset managers in the world want yield in emerging markets are just too small to absorb that, and that will lead to a massive bubble.
Besides that leading to a massive bubble, what is the other trigger point that could cause a sharp reversal in the equity space in South Africa?
I guess the sort of news item that's getting quite a lot of press of late is the whole Greece situation, and their problems with their sort of fiscal deficits. Got a bailout over the weekend, which they haven't yet utilized, but Greece is very close to defaulting, and I think Greece could stay with us for a number of months still in terms of news flow, and the risk is obviously of a contagion to other European countries like Portugal, etc.